This is Scott Becker with the Becker Private Equity in Business Podcast. We're thrilled each day to feature brilliant business people, brilliant private equity people. Today, we're thrilled to visit with Chris Felderman. Chris is the co-head of consulting and the head of the Chicago office at Palm Tree. Palm Tree is this magnificent investment bank and consulting firm. And he's going to tell us more about Palm Tree and what they do. A lot of fantastic mid-market work. Chris, can you take a moment to introduce yourself and tell the audience a little bit about Palm Tree?
Sure. Thanks, Scott. Like you said, my name is Chris Felderman. I'm a senior managing director at Palm Tree. I lead our Chicago office. I also oversee the operations of the firm's consulting business, which includes offerings in transaction advisory, accounting advisory, strategic finance, data and analytics, and operations consulting. And the way we like to describe Palm Tree is the modern M&A and operations advisory firm. And I like to explain it a little bit in the what, the when, and the how. So I'll just walk you through that. So in terms of the what, our primary objective is to provide perspectives on financial and operational data to enable buyers and sellers to make more informed decisions to drive value creation. When we think about the when, we really provide support to our private equity and corporate clients across the entire investment lifecycle. And pre-transaction, our offerings include financial and operational due diligence, as well as pre-close accounting and finance operations diagnostics, which includes the people process systems, as well as data and analytics assessments. On a post-close basis, our transitional offerings are generally focused around things companies taking on institutional capital for the first time typically have not focused on, which includes accounting and finance support to enhance and optimize financial reporting, cash management, net working capital management, improved process documentation, and we even provide interim support such as CFO, VP of Finance, or FP&A assistance. And then on the performance improvement and value creation side of our business, we offer solutions like audit preparedness, financial forecasting, budgeting enhancements, data and analytics improvements and implementations, and operational assessments and improvements that really provide true value creation and enhance enterprise value. And then on the how, we really offer these solutions through a bench of nearly 100 professionals across our 4 main offices in LA, Chicago, Detroit, and Dallas, and many of which have a prior Big Four, corporate finance, or investment banking background.
Thank you very, very much. And talk for a moment, Chris, about sort of your sort of growth, your trajectory, how you joined Palm Tree, and a little bit of your background.
Sure. So, I really got into the industry through my background in Big Four. I started out as an auditor. I moved into a transaction support role, spent several years in the Big Four doing that. Ultimately ventured out on my own to start my own transaction advisory consulting firm, and spent 5 or 6 years doing that. And I was eventually introduced to the founder of Palm Tree back in 2017, and they were trying to build a business similar to me in a different market, and really it allowed me to maintain my entrepreneurial spirit, but also gave me the bandwidth to continue to serve clients rather than with just the small team that I had. And so I joined on in 2018 to help build out a transaction advisory group, as well as build a Chicago office. And 6, 7 years later, we've got 25 folks in Chicago, and we've got 100 people across the nation, and we've expanded our offerings not only in the consulting business, but also offering investment banking services to go along with that, to really round out our ability to help our clients anywhere they are in the investment lifecycle.
Thank you. And in the sort of business space, the private equity space, what trends are you watching currently? What are you seeing? I mean, there's so many interesting things going on. People trying to put capital to work again. At the same time, I saw KKR report earnings recently and took it on the chin today. What are you seeing out there in the private equity space, and what should people be thinking about?
Right. Yeah, well, as an M&A advisory firm, we're always very focused on M&A activity and the effect that that activity has on the demand for our services. As we're all well aware, the M&A market in 2024 was quite challenging with large gaps in valuations between sellers and buyers. A lot of deal timelines were drawn out, et cetera, et cetera. So we're keenly watching to see if the recent resurgence in deal activity at the higher end of the market will continue trickling down to the mid-market and the lower mid-market, which is more of the space that we like to play in. So that's one thing we're watching. Another is, recent headlines are all about tariffs, right? So we're interested in those developments as they can obviously impact current and pending deal activity on many fronts, such as, the effect that they can have on sales or profitability forecasts, which are a major driver of deal value and, getting a deal across the finish line. We're also watching and paying attention to the effects that they might have on inflation, which also impacts interest rates. And we're very sensitive to that in the M&A industry, right? That can significantly alter the price a buyer is willing to pay for a business, not only by making the cost of the acquisition debt more expensive, but also constricting the free cash flow of the company they're looking to buy and thereby limiting its ability to invest in further growth.
Thank you. Let's touch on those three very quickly for a moment. So last year we saw the return to big M&A by some of the largest funds, the Blackstones, the KKRs, the Apollos, the mid-size funds just started to get back into the game sort of towards the end of last year, the start of this year, but still some concerns depending on what business you're in on tariffs. Also, interest rates aren't moving down anywhere nearly as quickly as some people had hoped, and that has an impact on deal flow and activity as well. Any more thoughts on what you're seeing? In what areas or industries are you seeing more activity versus less?
I less so have an opinion on the industries that we're seeing the activity in. It's more so the types of deals that we're seeing the activity in. And I would say we're seeing a lot more carve-outs over the past year, corporates that are selling off non-core assets. And that's an area where private equity can really come in and add value in a short time frame. We're also seeing a lot more small add-ons, tuck-ins that our clients are doing, where they don't have to take on additional debt to do it. They can fund it with the balance sheet. So those deals are getting across the finish line where at any time there's a need to take on new debt, it can really extend the timeline. And our clients are really digging in a lot deeper on the diligence on those deals, whether it be financial diligence or commercial diligence or operational diligence.
Thank you. No, that seems right on. More and more corporations carving out and selling off, spinning out things that probably aren't core to their business and looking at that. We just saw one of those in the education tech space, and so that sounds exactly right. And Chris, talk a little bit about your sort of take on what you're most focused on and excited about this year. Where are you most focused and excited?
Yeah, I mean, on the buy side, like I said, we've seen increased activity in carve-outs and small add-ons. So I think we're excited about the momentum there. And then as it relates to the sell side, which we can also help with, we expect in 2025 for there to be an increased focus from LPs on their distributions to paid-in capital, or DPI. So that's going to mean more potential for increased exit activity. And that just provides us with an opportunity really to help our clients prep their portfolio companies for those exits and make sure that they're getting maximum value on those exits.
And I think that is such a good point. I mean, you've got plenty of LPs and funds that feel like they're getting long in the tooth in terms of they're waiting for distributions, particularly as they're starting to re-up for the next funds. What's your sense of that? Will there be some acceleration in exits? I think one of the things I was concerning about the KKR news today is a huge amount of their fees or their profits are coming from fees rather than from exits. And as an investor, if you're looking at that 2 and 20 and you're paying a lot of the two, but not getting a lot of, or not seeing a lot of the profits on the exits, that's concerning as an investor. And that's what's driven KKR down today by 8% or so. What is your sense of that? At some point, limited partners get a little bit anxious to start seeing distributions on their paid-in capital, don't they?
Yeah, I mean, obviously they want to have a high return on the capital that they have invested, but I think in order for them to reinvest any funds, they're going to get to a point where they say, I'm less concerned about the return you're getting me. I just need to get those funds back so that I can reinvest them. And they may or may not reinvest it with the current fund, but they're going to be really focused on getting that cash back in the door. And I think, any fund that is able to hang on to an investment and extend the life of that investment right now and find additional ways to add value is trying to do that. But I do think there are going to be a lot of funds out there that kind of the time has run out, and it's going to be time for them to move into harvest mode instead of trying to extend the life of the current investments that they have.
But I think that's exactly right on, in that if you're an investor, you're not so worried about at this point maximizing return. You're trying to make sure your capital comes back in one piece, maybe kept close to the S&P and ready to deploy it again and hope that it's a better cycle. I think you've nailed that. I mean, that's the perspective, isn't it? If you're an investor, you're not necessarily worried at this point about maximization of that last vintage fund. You want to make sure it did okay and you're able to move forward.
Exactly. Yeah. I think it's more about preservation than it is about maximizing it.
I think that is right on. And talk a little bit about advice that you would give to sort of company founders, business founders. What do you tell, emerging leaders, emerging founders as they look at the markets, they look at what's going on and so forth?
I think the first piece of advice I'd give to an evolving leader is that the evolution is a journey, and it's rarely ever a straight path. And so you gotta ride the waves, and you gotta grind through the bumps. And when you are perceived externally as a leader, you've probably long been perceived as a leader by those around you. So, I would encourage them to continue to be curious. Don't be in a rush to have all the answers all the time. And as hard as it can be at times, just try to enjoy that ride.
Chris, let me ask you one final question. Where can people learn more about Palm Tree LLC? Where can they learn more about Chris Felderman?
You can go to palmtreellc.com to learn more about the firm. And, we've got a section on the website that has the bios of all of our senior leaders. And if you want to send me an email at cfelderman@palmtreellc.com, I'd be happy to share a brief overview of the firm and, our history and the offerings that we provide.
Chris, fantastic to visit with you. A huge fan of Palm Tree. Thank you so much for joining us today on the Becker Private Equity and Business Podcast. Thank you very, very much.
It's great to be here, Scott. Thanks for having me.